Hello, everyone, and welcome to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options, and I'll be facilitating this session tonight with Rob Roy. I'll introduce Rob here in just a few moments, but as always, we need to cover off some important housekeeping details about the session. First and foremost is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website if you'd like to read it in full detail there, or certainly feel free to take a screenshot of it if you like, but that's the main point to take away. All right, so for this session, we are live streaming to multiple platforms as always. So live streaming to YouTube, Twitter, Facebook, and then of course our Zoom audience. So Rob goes through his general presentation, then goes through some case study considerations and opens it up to a few questions with the time remaining. So we will do our best to get your question through to Rob, just keeping in mind that they are going to be coming from the numerous different platforms, and there's only so much time left in the session for that question portion. So if we don't get to your question, just know it has nothing to do with the validity. We just only have so much time. With that, if we don't get to your question, take it as encouragement to attend the insiders meeting when Rob takes 45 minutes of addressing questions for our subscribers. So obviously a much higher likelihood of getting your question addressed there. Lastly, I have the chat window as well. Any support related queries I can handle in there, and certainly feel encouraged to interact with other attendees in that window. Just make note that by default, it goes to hosts and panelists. So if you would like everyone on the webinar to see your message, be sure to change it to everyone instead of hosts and panelists. Wow, what a day that was. Nasdaq 100 out of 100 stocks down. You don't see that very often. So very interested in Rob's thoughts on that, of course, as always, and very excited to interact with you all. So thank you so much for joining us for this live presentation. And at this moment in time, I will hand over to who we're all here for. That's Rob Roy.
Hi, everybody. Thanks, Zach, and welcome to TradeFinder Live. As we go through TradeFinder, if you're new, welcome. We will talk about the markets, and as Zach mentioned, what a day it was in the markets today. We'll review any case study alerts that we may have closed for our alert subscribers at Elliott Wave Options. We'll then do a review of case study considerations that we've looked at in previous trade finders. We'll try to find one for tonight, and then Zach just went through the Q&A with whatever time we have left at the end. That's how it works. So again, welcome to TradeFinder Live. All right, so let's take a look at the market. Last night I posted some written commentary. You're used to seeing, at least I hope you are, the YouTube videos. And if you are live streaming on one of our services, YouTube, please go to our YouTube channel, Elliott Wave Options. As I said last night, I posted written commentary saying that today could be a volatile day. A lot of people were looking forward to some evidence that inflation had peaked, and some saying that it was collapsing. I had even heard on the financial networks. I think that had a lot to do with the 4 up days that we had before today. When I mentioned that if the number came in a little hotter than expected today, it could be problematic for the markets. I think that was pretty clairvoyant the way it turned out. Certainly a problem day. 100 out of 100 stocks on the Nasdaq 100 to the downside. Yeah, you don't see that very often. And so now we look at people talking concern about the Federal Reserve is going to do too much. Jeffrey Gundlach, he's a bond guy. But he was saying that he felt the Federal Reserve should only do 25 basis points, if anything, because all of the rate hikes that they've already done haven't had a chance to work themselves through the economy yet, which is true. It takes a while. It takes 6 to 9 months before the economy feels it. And so now there's concern that they're going to go too far. I've been talking about that for quite some time. It's been my belief. You've seen it on all the videos that the Federal Reserve will go from raising rates 1 month to likely cutting rates the very next as they realize that they've hurt the economy too much. But the consideration on the CPI was that falling oil prices would bring the overall number down, but food and other increases offset the drop from oil and energy, and food is just rocketing higher. And I don't have to tell you that if you go to the grocery store and buy your food, but it was in the numbers as well. and basically everything looked bad except for energy on the inflation front. So I think we can pretty much count on 75 basis points coming up at this Fed meeting. So the market clearly didn't like that. Another thing that I noted in my written commentary was that this 4-day rally that we'd had to the upside, two things of note. One, it was on declining volume. You can see the volume moving down. Pretty solid volume today, well above average volume on the sell-off, but each day had been lower volume on the move to the upside. And then in addition to that, we were also at a point that could have acted as resistance on the move higher, spot on that 50% corrective move from the start of the wave 5 lower. So we come down, retrace 50%, and then the move to the downside today. It sure looks like we're in a zigzag pattern. We have a qualified one, at least to the downside, heading towards that possible wave 5 low. I know that there's a lot of people still that don't think that we could make it down that far. We'll see if the market is able to go that far, but solid volume to the downside. It is a qualified zigzag pattern within a wave 5 to the downside. And what I think and what I thought all along is that at some point we would come down and at least test 380. 390 held, and we had the bounce. Now we're back down here. Is that just a one-day phenomenon? It just felt awfully ugly today to be a single one-day phenomenon. Maybe we bounce back tomorrow because now we have this big gap here that needs to be filled. So we'll see if we bounce back up and close that. But when you look at the moving averages, we're a little bit oversold, but not a whole lot oversold from that 10-day moving average. One of the things that I wanted to share with you tonight before we come back and go into other things to look at is I wanted to further along. There's a comment that I make. It's one of my rules in trading. If you've been watching these, you've heard me say it before, no security in any time frame gets very far away from the 10-day moving average. Well, I look at during the trading day, the futures on a 3-minute chart. So this is the ES chart on the futures, and this was a couple days ago. And that kind of whitish blue line there, light blue line, is the 10-day moving average. And even if you're a day trader, a lot of people have been asking about whether or not indicators work on a shorter term basis on futures, etc. Well, look, as soon as we move to the upside here, separation from the 10-day moving average, what happened? Right back down. Kind of vertical move, separation from the 10-day moving average, right back down. Trading along the 10-day moving average, got a little bit above it, right back to it. Now we went below it, so it doesn't matter whether you're above or below it. You start to get too far below it, back up, got too high, back to the 10-day moving average, above it, back to it, started to get above it here, and right back down to the 10-day moving average. That was the entire trading day right there. Every time we got separation from the 10-day moving average, we corrected back to it. That's why it's one of my rules. A lot of our alert subscribers, because we do education as well as sending out alerts, have taken this rule and put it into their own trading plans and said that, yeah, they really like that. It's helped a lot. So I thought I would just share that with you. That's a 3-minute chart. So, daily, whatever, but that's a 3-minute chart showing you that same rule there. Doesn't matter what time frame, no security in any time frame is very far away from the 10-day moving average. So anyway, I just wanted to share that with you. I thought you might find it interesting. So we are just a tiny bit oversold from the 10-day moving average, but not significantly. So could we have some follow through tomorrow? We could. Now, what's the bullish scenario? Well, the bullish scenario would be that we hold right here, that we hold above this low that we put in back on the 6th, right around this 390 level, and we make a slightly higher low. So if you're bullish on the market, that's what you're hanging your hat on right now. And you do have the potential, as I said, because of going up to fill this gap. So now we've had one day back below all 3 major moving averages. And you've heard me say this before as well. One day doesn't mean anything. And it's hard to say that today didn't mean anything. Today meant a lot. But you want to see follow through or confirmation. Do we get follow through to the downside? And it is kind of iffy with the fact that there's that gap there. We could follow through. I think that's pretty bearish for the market if we do follow through tomorrow. But that was what happened. So right on cue with the commentary, it could be a volatile day. And it certainly was that. But how volatile was it? Well, look at the VIX. It moved to the upside, but considering the fact that we were down nearly 180 points on the S&P, and we didn't even touch 30 on the VIX, I just find that hard to imagine. We closed at 27. It's not that high. So we're still playing around in this 25 range that we've been in for quite some time. We're a little bit above it, but the moving average is on, a little bit above the 10-day moving average on the VIX. So a little above it on the VIX, a little below it on the S&P. You can see where we could get a bounce tomorrow, bring those two back towards their 10-day moving averages, but we'll see how that ends up playing out over the next couple of trading days. But I just blown away by the fact that as ugly as today was, we didn't have a bigger spike in the VIX, and I think that's negative. I've said all along that I think we have to spike much higher than this if we're going to have that cathartic sell-off day. Not quite enough volume for that today, I don't think. We're above average volume, but what we're looking for is a massive volume spike, a big spike in the VIX, a down day like we had today, but with the spike in the VIX and higher volume, that's when we could put in, I think, a real tradable bottom. So now you have to respect the fact that the bottom may not be in the markets. I mean, you have to go back and look at that low in June could be in jeopardy over the next few weeks. So pretty ugly day in the markets, and inflation still a problem. And I don't think that the market was as concerned about the inflation number. In other words, the market's not so concerned about inflation being higher. It's eventually going to come down. They're going to get it lower. I think the concern now is the numbers are going to give the Fed ammunition to continue to raise rates. And the fear is the Fed will go too far. That's the fear in the market, I think, is more that the Fed is going to raise rates too far, more than, oh, inflation's out of control. And so it's just my opinion, for whatever that's worth. Looking at interest rates. So we look at the 10-year, as you would expect, to the upside, not significantly so. That's not surprising to me due to the fact that when money's coming out of the equities market, like a day like today, where's it going? It's going into the bond market. So without that offsetting some of it, I think we would have seen an even higher spike out of the 10-year, but we're marching back up, and look at this move. So on the 10-year, we had our wave 5 high. We came back to the previous 4 because the wave 5 didn't extend more than 100%, did everything it's supposed to do. And since then, this is all one impulse move. There's no corrective move in there. So that means at some point, we'll get a little bit of a correction in the 10-year, but then we're likely to go higher further from there, which means where is the end of the move to the 10-year? So it's looking kind of dicey there as far as the future of where the market could go. And then we take a look at the dollar. As you would expect, support for the dollar. A lot of people were saying that was it. The high of the dollar was in. We did hit a 61% fib level, very important level. To me, it's the strongest of all Fibonacci levels, the 61.8% level. So we had a pivot point there. We were headed lower, and a lot of people thought, that's it, the dollar's going to come back down, which would be helpful. But it didn't. It turned and moved back to the upside today. So all we kind of did was come down and test this area of support right here, still trading within the wave 5. So if the market continues to sell, if interest rates continue to go up, you're going to see the dollar break that pivot point high. But it is a strong level, so it's got to break it first. If it gets up there, it'll probably try to hold that level once again. I know on YouTube there was some comments back here that the dollar had double topped, and that was the end of it. We weren't going high in the dollar, but we did go higher, and we came back in to test that region, and now it looks like we might even threaten that high back from the 7th of September. So awful lot going on in the markets. Thought you might be a little bit concerned about where the dollar is going. All right, before we take a look at some of the other markets, I did want to show you our time strategy, which is just absolutely on fire right now. This is our AI-based strategy where we take advantage of volatility spikes and time decay. You think we might have a few potential candidates tomorrow after a day like today? I think there's going to be probably too many to count, especially with the fact that the VIX didn't spike so incredibly high. So take a look here. This is our the most recent trade study, or excuse me, time strategy. He tried to say alerts. I have broken ribs, so forgive me for wincing from time to time. So we have several winners in a row. There's only 2 that are still open for the month of September, so that have September expirations, and that'll be this Friday. One's underwater and one's profitable. But look at all these that are closed that were profitable. All these recent trades, a couple of them on Snap. So that's a pretty darn impressive record, I think. So if you're looking for some sort of a trading system, if you're struggling with the volatility in the market, give us a try. You can find out more about it at our website, ewotrader.com. Again, it's AI based. So I think we're one of the few that already has. There's lots of chatter about how AI is going to affect technical analysis in the future. I think we're one of the few that actually has a complete trading system gathered around AI. It looks at over 300 data points to help find entries. You can see the results. I haven't had a losing month yet. So that's pretty darn impressive, I think. So I wanted to share that with you as well. All right, so now let's go back and take a look at some of the other markets. And, you know, it's going to be the same story across the board, right? Maybe some international markets. Certainly want to take a look and see what India did today. But looking to the downside here on the diamonds and also gap lower. Same thing here, tap the 10-day moving average on the high. The difference here, I think, on the diamonds is we are at that level of support. So 310 is the level of support that equates to 380 on the SPY. So will the Dow not fall as much as the SPY? Perhaps, but there is more support down here at 300, getting down near that low from June. So kind of a dichotomy here with the diamonds. We're at the support level sooner, but we're also closer to the June low than we are on the SPY. So a little bit of separation there between the two. They've been in lockstep for a while, but we'll see if the diamonds can bounce off that 310 level tomorrow. How about the Qs? We've talked about this before, about the Qs underperforming the rest of the market, and just really a nasty day on the Qs. Gap down, maybe just from a percentage standpoint, a little bit lower as far as being oversold on the 10-day moving average, but we're not near the support area here. Kind of like the SPY, not as close as on the Dow, but about the same as the SPY, where 280 looks like the level of support on the Qs. So we just look to see if we bounce a little bit from this slightly oversold condition. Do we fill the gaps? But it looks like even if we have a couple of up days over the next couple of trading days, there's more downside to come. It would seem that way at this point. Clearly want to see what volume looked like on the Qs there as well. And again, above average volume, but not a spike that would put in a volume, kind of like what we saw back there in May. So I do think that we put the highlight on the last recording, more pain to come. You know, Chairman Powell basically warned us it's going to be painful, and it's certainly turning out to be just that. The IWM, the Russell, was trying to get back above that 190 level. It got all the way up to it, right up to it, touched it, hit it. We talked about this trading range between 170 and 190, and you know, coincidentally or on cue, however you want to view it, right up to 190, and now we're back down, almost back to 180 already. But the support on the IWM is 170. So when you're in this trading range, difficult to trade the IWM, in my opinion. You break above 190, you look to go long. You break above below 170, you look to go short. But staying in the middle here is where the problem is, because it's such a defined trading range in there. It's hard to figure out where you want to go while you're trading between 170 and 190. I think trading the Russell is pretty challenging right now. All right, Bitcoin. Just when it looked like Bitcoin was trying to take off with this move to the upside in the markets, you can see that we'd come back up. Let me get it there. Looked like we were going to try to take another run up towards 24. We didn't get the follow through. We talked about this before, and I just talked about it earlier tonight, that you have to have a follow through, a confirmation day. We had that break of 20,000 back there on the 6th. So that was last week. We talked about it right here in TradeFinder. And the question was, would we get follow through the next day? We didn't. And for those of you that are new, and again, welcome to everyone joining us on all the varying social media, live streaming services, etc. Talked about this as far as you have to have a second day of follow through or confirmation day. We had broken below this. I know Bitcoin trades 24/7, but it does give an in-a-day print, just like the futures, etc. And so we didn't get the follow through day. We came back up, broke above 20,000 yesterday. Looked like, hey, we're getting ready to take off and run. Not so fast. We're right back down towards 20,000, and that's where we are at the time of this recording, sitting right on top of this support level again. So we ran up to the 50-day moving average, got turned back. Now we're sitting at that all-important 20,000 level. So kind of the same type of scenario you have here in Bitcoin as I was just talking about with the IWM. You know, how do you trade between 20,000 and 24,000? It's just been back and forth since early to mid-June. I think you have to wait for a clean break below 20,000. And then we've talked about levels around 16, 15, 12 thousand where we could be headed from there. So you can go short below 20,000. And if you can break above 24,000, I think you'd see 28,000 in a very short period of time, because there's nothing in the way. You can see that we had this massive drop here to go from 28 to 24. It'll be just as vertical once we finally do, whenever that may come. When we break above 24,000, it'll be just as vertical back to 28 because there's no resistance in the way. It'll be just a clean move. Could happen in one day, 1 or 2 days maybe, to get back there, but it'd be really quick. All right, let's see how friends down under are doing. The Aussie with the EWA and traded up. We had talked about this before, how we'd come down here trying to hold 22. It broke below it. It did hold 21. So we had that 1 day spike right around 21 back there on September 7th, and had gotten above 22. So getting above 22, you would have thought, hey, we got a pretty good chance of going up here to 23, but then got turned back with today's move back below 22. So the same scenario again. And now we have a little more congestion there between 22 and 23. So your support down here is at 21 and your resistance is at 23. Anywhere in between here, again, difficult to trade. Do you put on a lot of sideways butterflies? I don't know. I think tomorrow's going to tell us a lot. I think if we do rally tomorrow and the VIX comes down, I think in some of these trading ranges, you could put on some at the money butterflies to look for trading ranges to last for a while. We are going to have to correct these oversold conditions at some point in time before we go down significantly lower, or likely to do that. But we'll know more tomorrow. So again, that's what I'll be watching for. If there's follow through tomorrow, do we get a big spike in the VIX? And then, we could be looking for, heading down to put a bottom in at some point in time. But if we do bounce tomorrow and the VIX comes back down, I think you could see these trading ranges, and I think trading some sideways butterflies in that scenario would make an awful lot of sense. All right, so looking at Canada, taking a look at the Canadian market, moving to the upside here, above 35. Jesus, hard to breathe, broken ribs. So breaking above 35 here, 1 day, and here we are back down below 35. So looking down towards 33. It's been a heck of a few weeks for me, hasn't it? Sound pitiful. But breaking above 35 here one day, there's your have to have a second day follow through or confirmation day. We didn't get it. So now we're back in here. Here's another trading range. So you see the theme? They're all looking the same with these trading ranges. So let's watch and see what happens tomorrow. You've got all kinds of potential trading range type trades, I think, if we have a little bit of a bounce tomorrow and a pullback down in the VIX. And I think those would be really good looking trades because I think the VIX is high enough to where you'd have some premium that you could bring in if the VIX starts to head back down a little bit and we calm down, even just for a few days. These could be short-term trades. I'm not saying the market is going to stay in a trading range for a long period of time, but you could get, a 4 or 5 day butterfly and generate, 30 to 50%. That's very doable if that scenario presents itself tomorrow. So looking at INDA, and I thought this might be pretty good looking. It looked like we were about to take off. We have that wave 4 is now disqualified because it's hit this 78.6% level. So what that means, it was flirting with it back over here, remember, in mid-August. So now you take the Elliott wave off because 78.6 disqualifies this 5-wave downward pattern. So the INDA does not look like it wants to come down and test the lows. I don't think we see the INDA back down here at 40. In fact, the INDA is going to try really hard to hold right here at 43. And we'll see if it can do that. Even if it breaks a little bit below that, it still has a 50-day moving average support just below that. So even with some follow through tomorrow, it would be difficult to imagine, unless just the whole global economy comes apart. Nobody's really expecting that unless some sort of a black swan event happens, something like China invading Taiwan, something really significant that would change the whole works here rather than just potentially moving lower. But I think finding support down there at 43, you could take a speculative shot on the INDA. If it does come down and touch 43, you could kind of take a shot going long there. However, if it doesn't hold 43 for whatever reason, well, you have a great bearish trade, because here we are back with this move to the upside here being pretty vertical. It would be pretty vertical back down. So if by chance it doesn't hold 43, you have a great downside trade. But it looks at this point in time, at least, like it's certainly going to want to try, because it hasn't been involved in the selling that we've had prior to that 4-day rally going into today that we had. It's done a much better job along those lines. So let's look at Germany and see if we're back in that wave 5 to the downside. And we've just moved up. We hit resistance at 23. We talked about 23 being resistance, coincided with the 50-day moving average, gap back down today. We have a little bit of support here at 22. We break back below that again, and I think we're off to the races down to that wave 5 low. But let it break 22 first before you look along those lines. So that's what it looks like on the international markets. Now let's go take a look at some of our recent, there's not a whole lot of them to look at, recent case study considerations that we've done with previous trade finders. And here we are, Reliance 2, we still have this. And we look, and the whole plan here was we stay short as long as we're below 200. Now, another thing that I wanted to share with you, some of you may have heard me talk about this before, but my mentor, when I first started trading options 25 years ago, over 20 years ago, would say they would look for this. Third time's a charm. If you had like a triple top, whatever happened after that, in his viewpoint, that's the next move. So he would view this as there's very little chance now of breaking above 200 here. The fact that we hit it and bounced down means that the likely move here is further downside move. Now, we did close right on top of the 50-day moving average, so we'll need to break below that. We're not very oversold, as you can see. In fact, we were a tiny bit overbought going into this, but his viewpoint is more downside to come there. We'll see how that plays out. And then HZO, when we looked at that one, here's where we are now, and 35 was the key. Look what happened. We broke below 35. We came back and tested it, and now went lower. We're right at 100% extension on this wave 5, but we are just a touch oversold with this gap. To ask for another test of 35 might be asking a lot. Without that big gap down today, would have been a great entry to the downside, but you just didn't have it because the CPI number came out before the market opened and you gapped to the downside. So now you're going to have to kind of wait and see how this plays out with this oversold condition and potentially filling that gap. But HZO could go way down. It could have a really significant move lower from here. Mosaic was hanging in there pretty well today. Kind of gave it up a bit at the end of the day, just succumbed, but it was trying to be to the upside for the majority of the day, but it had an ugly day yesterday. So it kind of got a jump on what happened with the market today, and still feel like we're going to come down and test these lows right through here. That's been the thesis for a while now on MOS, and don't see anything changing that today. So then going back to August 23rd, we looked at Love Airlines for a strangle, and you can see that we kind of started down here and then went back up. And now what we've done, and this happens sometimes in these triangle patterns, is you formed a larger triangle. It's actually a better looking triangle than it was before, and it's also confirmed by the fact that the ADX continued lower. So that gives you your confirmation that yes, it is still a triangle. It's just formed a larger triangle, went a little bit up, went a little bit down, and we're still looking for the breakout that will occur from Southwest Airlines, symbol LUV. So confirmation with that move lower. So hang in there. That was only a couple weeks ago, and then we had AJRD, and take a look at this, back up, and here we are right back down to kind of where we were before. Also, same scenario here, forming a larger, in this case, ascending triangle, and then you look at the ADX also going down. So both of those two have formed larger triangles. Now, I talk about this to our subscribers. It's frustrating when this happens because it just takes longer for the move to happen, but you usually get rewarded. The larger the triangle, you usually get a more volatile breakout once it finally happens. So you succumb to some time decay in the meantime, but usually you get a pretty nice move once it finally happens. So we'll obviously be watching these over the next couple of weeks. And then last week we looked at AbbVie, and what we said was if it stays below 140, so the next day it did trade below 140. So if you were looking for a downside trade following that, you would have put that on, and then the next couple of days you'd have been like, well, that's not what we're looking for. But now here we are right back to where we were. And so any move to the downside from here, and that's profitable in a downside trade. So it took away 3 up days in one day, where the market took away 4 up days in one day. So still looks like a good potential candidate to the downside there. So both of our strangles still look really good. They're just larger triangles, and this downside trade based on the move back to the downside today looks like it wants to continue lower, close below the 10-day moving average after it recovered it. Let's see if it follows through tomorrow or not. So lots to think about with what occurs in the markets tomorrow. So we'll see how that all plays out. All right, so now let's go ahead and see if we can find I don't know, might be difficult on a day like today to find any sort of a potential case study consideration. The consolidating stocks, I mean, we can look at that. There's 73 of them. The VIX is 27. As you know, I really don't like putting on strangles when the VIX is above 25. That's kind of our ceiling. Anything below 25, and we look to see for significant moves there. where we could have some volatility, but above 27, you're paying extra premium for the options, and then that takes away some of your profit when the breakout finally does occur, especially if it breaks to the upside and the volatility comes down, which is what normally happens in that scenario. All right, so well, let's take a look and see what we could find. We do have one. We are integrating. Oh, look at that. How about that for timing? I promise you, I have not looked at that before. Those of you that have been with us before know that I don't look at the charts before I do these webinars, because I don't like to do the setups and all that kind of stuff. I feel like it's more educational if we talk through them together. And so when I look at the charts for the first time, basically what I'm sharing with you is what's going through my mind on whether it looks like a candidate or not. So we have one candidate that's integrated in with our AI basis that we're going through testing with in our impulse search. We have an impulse portfolio, which is our directional portfolio. And lo and behold, there it is, ABBV, which is the one that we'd done from the wave 3 chart last week. So there you go. I think that gives some confidence on some continuation there. But since we already have that one, that ain't going to help us tonight. So let's take a look and see if there's anything, maybe because we had gone sideways and back to the upside there might be something. There is of a consolidating stock that's in a bearish wave 3. Let's see what this chart looks like of Workiva, and you can see the oscillator there has come back to the zero line. It's pretty quiet. The ADX almost down to 13, which is pretty good when you have a VIX above 25. Often you're looking for the VIX just below 15. But then you can see that even though this may be technically in a wave 3, it's moved into a bunch of flats here. Although maybe, let's see if that's a zigzag. Perhaps this is a qualified zigzag here. And it is actually. And the 100% would be just going below the trading range. I don't like that doji today, though. Who knows what's going to happen with that tomorrow? So look, we have a doji with the 10, 30, and 50-day moving averages all converging at the exact same spot. I think you have to wait on that one and see what happens tomorrow. Now with that doji, it could just be further move to the downside, or it could be a bounce higher. Remember, a doji means indecision. It doesn't necessarily mean a change of direction. A lot of people think that's what it means. It's because often when you have a doji, the direction changes, but that's not the definition of a doji. The definition of a doji is indecision. So where do we go from here? So if we take a look at this area right through there at 70, we have right in the middle of this trading range, all these moving averages, and a doji. I just don't think we can do anything with that. That would just be a flat out guess. Now, perhaps you put that on a watch list, see what happens tomorrow. If it does start to break down tomorrow, I think you have a great trade, probably down to 57. If it bounces back to the upside, does it just come up and fill this gap? Does it go higher than that? Wait and see. If it breaks above this top part here at 75, well, then you might have a bullish trade. So just too many unknowns there to call that with one of our case study considerations. Let's see if there's anything in a bullish wave 3. That would be a little bit surprising with today's move, and right, there's nothing there. So maybe let's just see what's just on the plain old bearish list in these wave 3s, and something that might be looking to continue to move lower. Zoom, boy, we had a butterfly for our alert subscribers in our speculative portfolio. We also have a portfolio where it doesn't fall within the rules of the impulse search, but there's things that look good. And so we had an 80, 90, 100 butterfly, and it had moved up in yesterday's market enough. I'll show you that one next week. I just wanted to show you the results of all those AI time strategies tonight. But next week, I'll show you this Zoom butterfly. And you can see it had moved off this. So it's moving towards the midpoint. So it's profitable from the butterfly. We took it off yesterday. How good a timing was that? As well, now we break down and we close below 80. Could we go lower from here? Well, it is in a wave 3. Let's see what the negative directional indicator is moving up. Perhaps we do. I mean, if we break below 80, then it does come down here to 70 very quickly. Understand that that's more on the speculative side because it's not in the impulse search. It's in a wave 3 search. But look what happened when we found with ABBV, and then now it turns out to be in an AI impulse search. So now we take a look and see if we can get any follow through there. Little bit oversold, gap down. So that's the problem with today's move, is all these gaps. If we didn't have all these gap downs, I would say it's highly likely we go down again tomorrow. And we may still go lower tomorrow, but all these gaps call that into question. We just have to see how that plays out. It's awfully interesting, though, as far as a potential downside move. Now, one thing that we could do is put a restriction on this, that if it breaks back above 80, we're out. So 80 is such a point of support resistance. The more conservative move is to wait and see if you get follow through. If you get a follow through day, then you're trading down here to 70 or 65. But if it bounces back above 80, that would be your exit. So because it doesn't follow all the rules, that's what goes into the speculative portfolio, where some things look really good, but it doesn't follow every single rule. And then that's it. Do you want to take a shot at it or not? That's why we have a speculative portfolio. And that should be just like really, just money that is there just to take, see what happens. So, that's kind of interesting. Let's see what else. Maybe we find something else. How about gold? I'm sure somebody's going to ask about gold anyway. So let's look at RGLD and see what that looks like. And that may be where we want to go here. Looking at the moving averages and with what's happened today, it's hard to imagine a bullish case now for gold with that CPI report. So you look here and we have, and Royal Gold's a minor, but you see here with support resistance at 100, we kind of got back up towards it, didn't quite get there, down again today, and not that oversold. Same type of thing here. Would be better if we had another down day. We're likely coming down to at least test 90, but we could be certainly moving. Yeah. The CCI got back to 0 and rolled over. Plenty of room to the downside there. That could be pretty interesting. Let's just do that. So that's going to be our case study consideration for tonight. Is RGLD moving lower? As I said, it's just hard to fathom a catalyst for it to go back to the upside, other than being oversold is the only catalyst from financial data that could be coming out to move that back to the upside. So, all right, with that, Zach, how about right on time? Let's go and move, and I'll take some questions.
Yes, well done, Rob. Thank you for that presentation, especially given the circumstances you mentioned a bit earlier. So there's been lots of kind thoughts coming through the chat on your speedy recovery and whatnot. And one subscriber mentioned that you should take some time off to heal. And I said, I agree, but nothing will keep Rob from the markets. So
yeah, no, it's just trying to talk that fast is the issue to get the breath. But anyway, thank you for the comment. It's just, geez, the last couple of weeks have been a mess, but hey, it's life.
Yeah, absolutely. Well, hopefully things start to take a positive turn for you.
That'd be good, wouldn't it? Yeah, that'd be good.
Yeah, absolutely. So I don't want to take up too much time because I know we have lots of questions out there, but I just wanted to mention reading over your commentary was spot on. So well done there. And just as a quick transition, the Ethereum merge is taking place soon. And just when we were looking at Bitcoin, it reminded me it'll be interesting to see what happens with Ethereum after that takes place. And it's going from a proof of work system to proof of stake, which is similar to Cardano's platform. So very interested to see what happens when that takes place here.
Do you have a time frame? You're the crypto guy.
1 day, 1 hour, 33 minutes.
Oh, wow. Okay. Guess we won't have to wait very long. Couldn't you be a little more exact?
Let's see how many seconds. 49 seconds. So yeah, no, very interested next time we meet to go over that and see where things have gone. All right. So we'll transition over to YouTube. Chris has a question here. Would Rob please take a look at REGN? Holding 700 puts, looking for it to pull back to around 670 level or lower. Thanks.
Yeah, I think you're where you need to be on that. People know how I feel about these vertical moves. Now, it started down today. The only negative, the only concern there is that doji today. Does it bounce a little bit before? But it will get back towards this 10-day moving average. I think the worst case scenario in the position that you have is it stays status quo. And it goes sideways and allows the 10-day moving average to catch up. In that case, you may not make money, but you're not really in a very, very risky position there. So if you can get it to break below 700, you're gold, because that's where there's a little bit of support. Probably why we have that doji today is because there's, you can see the high there from May and the resistance that occurred back there in March. You got a great trade. If you can just get it below 700, I think your target price is right. Little concern with the doji could bounce tomorrow, but even if it does, I think the bounce would be short-lived. I think you're on the right side of that trade. So good luck with it. I think you're going to be happy with it in the end.
Absolutely. It certainly looks good. So good luck there, Chris. Next up, we'll go back over to Zoom. We have a question here from Nicholas. Seeing a huge triangle on the SPY weekly going back to January. Would love some commentary on that.
All right, so let's take a look at the weekly chart. Is that our Nicholas in India, or is that a different Nicholas?
I believe it is.
How you doing, Nicholas? So there's a little bit of a triangle forming, as Nick mentioned, and which way do we break from there is going to be really interesting, isn't it? I mean, the wave forward came down to 57%, almost 61.8. So, I mean, are we being really picky by saying it could go a little bit lower? It could. If we get down towards this area here, that is where support is. And then coming down and testing these lows, maybe going down towards that 350 level would probably put in that 61.8% level. So could you make a case for a downside breakout out of this weekly triangle? You could. It is a well-formed triangle. With weeklies, you gotta wait so long to see when the breakouts occur. But looking for the longer term, whichever way it breaks out is probably where we're headed for quite some time. So I think it merits keeping an eye on that chart and seeing where we go from here. With the ADX so high, you could even go into a scenario where you formed a larger triangle here, as good as that one looks, with the ADX all the way up at 30. I just going back and reviewing the rules on the ADX and triangles. When we look for triangles and strangles, we want to see that ADX 15, 13 in that area, depending on where the VIX is, because the ADX being that low means that the stock has been non-directional for a while. Longer it's non-directional, greater the chance it's going to break out and become directional. So that plays in with our triangles. And when you have a triangle with an ADX higher, could you get a breakout? Yes. So I just want to say that triangles can break out without a low ADX, but having the low ADX into the mix when you're creating a strangle from a triangle, whatever, means that you're less likely to have to wait and suffer through significant amounts of time decay before the breakout occurs. So it's pretty interesting on this one that the triangle looks that good and the VIX is still at 30, or excuse me, the ADX is still at 30. So I know we'll see how that plays out. But you could absolutely make a case for a downside breakout, take out that low, hit the 61.8% level, and then I think that is a golden entry to go long from there. Or we could break higher from here and say that the low is in from June. Yeah, it could be very interesting to see. But yeah, interesting looking chart.
Absolutely. Yeah, we will certainly find out, especially with everything that took place today. Anything could happen. So Nicholas says, doing well, Rob. Glad to see you. Wishing you all the best.
Thanks. Good to hear from you, Nicholas. Hope you're doing well also.
Yes, indeed. So Manuel from YouTube would like the FSLR wave count, looking for a vertical move.
That's one we haven't looked at for quite some time for solar. See what that chart looks like. Oh, there it is, a vertical move. Holy cow, look at that. Let's get to the daily chart. Not quite as vertical on the daily chart, but still a pretty vertical move. And yeah, that's actually looks like a pretty good downside trade. It's so overbought with the ADX above 50. You do want to see it kind of roll over first, though, because the positive directional indicators tick back to the upside. Isn't that interesting with oil and energy coming down that solar would be still powering higher like that? Doesn't make a whole lot of sense, but it tapped the 10-day moving average on the low. But it just seems like that one's going to want to come back down and test that 120 level. It was resistance and it was able to break above it. But it seems like it would want to come down and test that from its overbought condition. Now, here's the other overbought, oversold rule. Talk about no security in any time frame gets very far away from the 10-day moving average. When you see this separation, those of you who've been around a while have heard me talk about this as well. When the 10-day moving average separates that far from the 50-day moving average, usually they come back and converge. It's the same rule. Just as no security gets any very far away from the 10-day moving average, the 10 and the 50 don't diverge significantly for long either. And that's about as far as they usually go. So yeah, I think that if you're looking for a potential downside trade, that might be it there to at least come down and test that 120 level. Yeah, haven't looked at for solar for a while. That's a good, I like that one.
Absolutely. Yeah, no, that was an interesting chart to bring up there. So this is kind of a combo question from both a Zoom subscriber and YouTube subscriber about the PPI meeting tomorrow. Susan just asked about it, and Daniel from YouTube says, yes, bouncing from support or selling due to tomorrow's PPI.
Yeah, so the PPI, for those of you that aren't sure what we're talking about, is a producer price index. So that's the wholesale prices. So we got CPI consumer. So that's basically call that the retail side. And so we'll see a lot of people look at what's the spread, because if the wholesalers are able to pass prices on and the consumers are paying it, then they're okay. But if you start to lessen the gap between what wholesalers are having to pay and then what they're able to get back, it squeezes their profit margin. And so then it hurts businesses if they aren't able to pass those increased prices on. So people will be watching that PPI tomorrow for that reason. And it'll be interesting to hear what the number is and how that plays out. It does affect margins and therefore earnings, profits down the road. So yeah, important number.
Yeah, we will find out tomorrow. So we'll go back over to YouTube here. Richard says EVGO.
I haven't looked at that one in a while either. Man, that is just dead spot on 9, isn't it? It's like glued to 9 with a doji today. So maybe we're going to move. But I wouldn't call this a fantastic triangle, even though you can see clearly you have significant high, significant low, and then a lot of movement in between. I prefer to see touches of the line in the triangle. So I would prefer just seeing, like this come down to here, or this move here come up to that line. The more touches on the two trend lines, the upper and lower trend lines, the more I like the formation of the triangle. But I would imagine you have a pretty low. It's not as low as you would have thought. It is below 13 though. So I would watch this one closely. You could even try a strangle on it if you wanted to, or just watch it and see which way it goes. Clearly, when it wants to move, it can move. It goes sideways for a while and then it makes pretty significant moves. It's done that a lot. And it looks like it's ready for another one of those now. So I'd watch that closely, and whichever way it goes, jump on top of it. You could go, you got 6 points or 3 points either way, right? It's easily could go up to 12, easily come back to 6, and it's probably going to do that. If it breaks to the upside, it probably runs right to 12. If it breaks lower, probably runs right down to 6. So yeah, that's a pretty good one.
Absolutely. Thanks, Rob. Lou would like to look at Ford stock.
What was it?
Ford.
Oh, Ford. As well as it's hung in there, even it was down today, but just down to the 50-day moving average there. So just sitting right on top of that. This is about as defensive of the stock as you get. There's so many people that hold Ford stock for the dividend, et cetera. And then if the economy really does start to get hurt, you could see this move down, but you're going to want to watch and see how it handles this 50-day moving average. If it breaks that, then it's probably coming all the way back down to 13. And it'll probably do that rather quickly because it ran from that same level back up to its high rather quickly. So it's going to want to try to hold the 50-day moving average here. I think some institutions would probably try to support that as well. Perhaps that one gives a little bit of a bounce. So this is a little tougher here because to go long on Ford, I'd want to see it break back above 16 and then take another run higher, which seems a little doubtful until we get this wave of selling over. I think once the market does get the bottom in and we start moving higher, I think this Ford's going to be a great trade to the upside. Is it there yet now? I'm just not quite sure. I would want to see how it holds that 50-day moving average tomorrow, because as I said, if it can't hold that, it's probably right back down to 13 and then perhaps consolidates and start over. But tomorrow will be a big deal for Ford as well.
Absolutely.
That one, while they're picking some interesting ones.
Yeah, I agree. Normally there's some pretty good charts in general, but tonight's been
usually ask for good ones, but tonight especially. All right.
So we have another combo question here from both YouTube and Zoom asking about NEO.
It's just so hard to do anything with. We could go from Ford to NEO. The China stocks with the rhetoric has calmed down, right? So they were flying drones. Taiwan was shooting at them, all that kind of stuff. Now that kind of has calmed down a bit, and that's allowed NEO to take a little bit of a bounce higher from here. That's the risk that you're taking, and you have geopolitical risk here. I think that if that stuff stays out of it, if the geopolitical news stays out of it, I think NEO could be ready to go here, and I think it may test 30. It's a tiny bit overbought on today's move, but your stop is 20, and so that that's the easy thing. When you go long here, the stop's at 20. You could run to 30 pretty easily. Just, overnight news at any time, though, the stock could open the next day big to the downside. So if you're willing to take that risk, I think you could take a speculative shot at NEO right now. The market, with what happened today in so many stocks to the downside, money is going to be looking. There's going to be watch the rotations. There's going to be rotations in the market now. That's what happens when you have a wipeout day like today. And so money is going to be looking for what's outperforming and what didn't succumb to the selling, what's showing strength in the wave of what's going on. NEO clearly has done that. So barring the any sort of geopolitical news, you could catch a bid there. on NEO and it could turn back to the upside. That ADX is trying to come up. It's not there yet, but you have fantastic separation between the two directional indicators. The more conservative play, let that ADX get above 20. If you wanted to be real aggressive and take a shot now, because the danger, right, because the ADX lags a little bit, is the danger is that by the time the ADX gets above 20, you're already up at 26 or 7 or so, and you've missed a good chunk of the move. So if you wanted to take a speculative shot, I think you could do a lot worse than trying this one. Looks like looks pretty good.
Absolutely. I see we're a minute after, so given that you are probably short of breath at this moment in time, I will happily, wrap things up whenever you're ready.
Let's do 2 more and then we'll call it, and I'll I'll get on my breathalyzer thingy, my bobber.
Well, again, well wishes there, and there's been lots of kind thoughts coming through on all the platforms in regards to a speedy recovery for you. So thank you everyone for that. And of course, I wish the same for you. So we will wrap up with the 2 big ones, the 2 big A's from Marcus, and see how those did today.
Well, Apple had a really ugly day today, following a really nice day yesterday. So gave it all right back. The wave 4 is at 55%. So we want to try to 155 has been an important level. Anywhere between 150 and 155 really has been a massive point of support, probably in this selling, unless the selling's over, which I just don't think. It's a one-day event. Even if we bounce over the next day or two, I think Apple's going to test 150, and that's going to be the key. If it breaks 150, yikes, that's really negative for the market, and Apple goes to 140 rather quickly. And then, if the market tests the low, it probably does. But it's going to try to hold in here. Then, it may drift down to 150. I don't think it's going to have another ugly day like it did today, but probably drifts down to 150. And that would be right around a 61.8% wave 4. So, it looked like it was trying to make an upside breakout, and it got turned back with what happened today. And boy, they were quick to sell it. Pretty ugly day, down nearly 6%. So Amazon, is that the 2 A's we were talking about?
That would be the one, sir.
And same thing here. It was breaking nicely to the upside, 7% to the downside on Amazon. That's a nasty day post split, with all those shares out there. And you can see that we have a dangerous trend line here. You don't want to see Amazon go lower than where it is now, because that trend line has been in effect since basically the June low. A break below there is really not good, because it probably means we're coming down to 110. It might find a little bit of support at 120, because there is some congestion there. But that trend line is perilous there. And so you want to kind of see it hold right in here, I think. Otherwise, it could be more downside to come there on Amazon. Hope not. So I know so many people that own that, but that upper trend line is going to be really key and important to hold. So that's what I see there. All right, thanks everybody. And as I say each and every week, but we really are sincere. I'm passionate about this. Time's the most valuable asset we all have. We very much appreciate it when you spend some of your valuable time with us, and we in turn try to do our best to make that an informative and educational use of your time. Thanks so much. Have a great rest of your week. And I don't think the volatility is done yet. I think it's here for a bit now. So we'll see. And talk to everybody soon. Take care.